What's up, James? How are you doing? Hope you had a great week so far. I'll be reviewing the last trades I sent for VVS. So let's see how we did. This first trade was a gold short. As you can see, this is the original trade chart sent. The idea behind this trade was that price was engineering liquidity by creating these fake double tops here. As you can see, we have a double top right here. So what is resting above every high or above every double top? A lot of buy stops. Why a buy stop? Because if there is people or institutions buying at this level more than selling at these levels, they will put their stop loss right above this high. So when you are in a sell and if your stop loss gets triggered, that sell become a buy stop. So you can get out of the trade as soon as it hits that precise levels. So anticipating that run on stop, or what you can tell as stop hunt, you can see that price did that exactly on this level where it passed both of these levels, and when they grab that liquidity, you can see that we have a minor spike in volume here. That's when price started going down. This was the entry that we had marked. This entry was not only based on this double top, but also in this last distribution phase right here on our left. After hitting that level, you can see the price starting rallying to the downside. In this trade, we had a very nice risk to reward ratio of 11.32. This means that by risking only 1% of this trade on this trade, you have made 11% of your equity. When I was in this trade, I took partials 2 times. I take partials on every swing low. So for example, the last swing low was here. I took partials here, and the last swing low, the other swing low was around here. So I took partials here. After taking partials 1 or 2 times, I like to put my stop loss at break even and see if I can hit the next swing low, which was this one. It didn't hit it. So price came back up and I secured all my profits and the remaining open position by hitting my stop loss right here at break even. So another trade I sent was NCD USD scalp long right here. This is the original chart. If we go back here, we can see how we did. The idea behind this trade is that basically we have a kind of double bottom here, similar idea like in gold. We have this last bearish wick and candle here taking the last remaining liquidity here. We have a liquidity void here that was taken by this move. So naturally, as smart money created this move, when price goes back to that level, we can expect them to push price again up. So this call made a 2.72 risk to reward ratio. I actually on this trade I risked only 0.45% of my equity and made around 1%. Another trade I sent was a short on NCD USD as well. I sent 2 possible shorts or entries. Let's go to those. Okay, so here is the first entry, which actually is the one I took. You can see that price when it hit this level that I had marked, this one I had marked previously, we started making what you can tell this is a Wyckoff distribution schematic. So you could have waited for this to form to take the trade, or you could just enter the trade here, because I based my trade on a previous distribution here on the left. So that's why I entered the market right when it hit my entry. But you could have just waited for this structure to form and one can enter safely when the break of structure happens. We have this structure with this support here, it gets broken here, and the retest of the last structure here is where you could have entered the trade as well, being safer. So this trade made roughly 4 RR. Oh yeah, it made 4.09 risk to reward ratio. I took partials around this level, which was a previously marked level on this structure, and then I took partial on these levels because we had previously this swing high here, and it was a very important zone for price to reverse. So, well, those were the trades I took these past days. I hope you like it. If you want to learn more about this, learn how to trade like a professional, you can check the link in the description and join us. Hope you enjoy it, and see you in the next video.